Hey there, Ken Zorvich, NFM Lending. Hope you're having an excellent start to your weekend. So, wanted to talk to you about credit reports. And I think these are definitely one of the areas where people have the most misconceptions when they come into our office. In fact, it's really one of the areas that people are the most afraid of when they go to get pre approved. They're just always worried, is it high enough? Or, something that happened to me years ago is still weighing me down and it's going to prevent me from buying. So let me just dispel of a few myths that I think are out there when it comes to credit, or things that you maybe didn't know that can help improve your credit. So first of all, let's talk about what the idea of credit repair. I'm not against credit repair. There are companies out there that do credit repair. The reason why they're so polarizing, or why some people have had bad experiences with them, is because they're technically doing something a consumer can do, right? So there's really no magic wand to fix credit. Okay. You can't say, well, I had this bankruptcy, this foreclosure, these credit cards were all late, and credit repair, just fix them. Doesn't really work that way. Yes, credit repair can help with maybe removing some accounts, like some collections, if you pay them and do these different things. But there's a lot of work that you can do on your own to fix your credit. So don't go into a credit repair place and think, oh, they're just going to wave this magic wand and get my score higher. It's going to take addressing whatever these accounts are that had caused you to get low scores to begin with. Um, what really moves the needle on your credit score? What's going to really get your credit score to go higher? It's definitely activity in the revolving credit space. The installment loans and things like car loans and mortgages and recreational vehicles or student loans, those don't move the needle much if you maybe make like an extra payment or you pay those down. And it's because it's a set balance and payment in place. They're just sort of like the steadiness in your credit score. The revolving debt is like the definitely the live accounts that are going to move things in a much faster space, both higher and lower. So you go delinquent on a credit card, your score is going to start dropping. But the way you can get the most out of that is if you keep the balances of your credit cards below about 50% of the available lines. So just for some simple math, if the available line on the credit card was $5,000 and you can keep it at 2,500 or less, you will maximize the score you can get on your credit report. Sometimes you'll hear maybe 30% or less. Yes, that could tick up a little bit, but there's a huge jump when you hit above 50%. So keep that in mind. Let's talk about collections, charge-offs. Collections and charge-offs, people think you can't get a loan because you have those, and that's not true at all. You can get a mortgage even with having collections and charge-offs. What I think people get wrong is what can really move your credit score based off these collections and charge-offs. So let's start with charge-offs. If a charge-off is reporting on your credit, the only way to impact your credit score is to pay the balance off. Okay, so if it has a balance, it needs to be paid to zero. And if it does, you could see an increase in your credit score. With a collection, the only way that collection can be, like paying that collection will help your credit, is if you can get the collection removed altogether from your credit report. That's not very easy depending on the source. So you can see that with some of the medical collections. It's harder to see that with, say, like a utility company, some credit cards that could be in collection. If you decide to pay them, just know that doesn't really change your score at all unless it gets removed from your credit report altogether. But these are all things that we assist clients with when they come to us, because we run what's called a credit simulator. It's a software where we can say, hey, if you follow these, steps, you'll increase your score this many points. That's essentially how the simulator works. So it becomes a very, very targeted and methodical approach to fixing credit. So if you're worried about your credit, if you think you've damaged it, if you are, or someone that's looking to purchase here in the near future and they want to make sure their credit gets sorted out, let me know. We'd be happy to take a look at this for them. And look, I'd love to be in this business in 5 years. If you know someone looking to purchase or refinance, please think of me. Have a great weekend.